Hello and welcome back for our 2023 Outlook. Today we're looking out to the year ahead and highlighting some key themes likely to shape the DeFi space. If you haven't already done so, check out the 2022 review we released 2 days ago and get caught up on the Defiant's highs, lows, and surprising moments of this past year. Thanks to Algify for sponsoring this video, more on them later. There's no doubt that the catastrophic collapse of centralized exchanges this year has eroded trust in decentralized finance. Investment portfolios are down, NFT prices have plummeted, former FTX CEO Sam Bankman-Fried is facing a triple-digit jail sentence, and lawmakers and regulators are clamping down with anti-crypto bills and lawsuits. But the crypto winter will, hopefully, come to an end. Quality projects and new use cases for digital assets are on the horizon. So without further ado, we give you the Defiant's 2023 Outlook. The crypto contagion isn't over. Several projects have failed and more are likely to fail in 2023, leaving behind only well-managed, well-financed projects. This process should pave the way for safer, healthier, more transparent crypto markets and businesses and help the digital asset industry rebuild its reputation. 2023 will likely see developers shift their focus from building crypto infrastructure to building crypto applications. Specifically, as Layer 1 blockchains like Ethereum continue to develop in terms of scalability and privacy, Layer 2s, with their cheaper fees and other benefits, should support the coming wave of user-friendly applications. Layer 2s like Arbitrum and Optimism have grown rapidly this year, and in 2023 we'll be keeping an eye on non-financial applications of the technology, such as social media, gaming, and the metaverse. Speaking of business, keep an eye out for new enterprise adoption. Disney, Adidas, Starbucks, and many household brands have quietly embraced blockchain technology. On the payment side, Google's parent company, Alphabet, announced it'll accept crypto payments early next year. Institutional investors like Sequoia, Temasek, and SoftBank have experienced the upside and downside of being early adopters. Notably, Sequoia wrote off their entire investment into FTX and vowed to up their due diligence going forward. Companies seeking investment may therefore expect more stringent review before receiving funding in the coming years. Beyond increased enterprise adoption of blockchain and smart contract tech, we expect zero-knowledge privacy technology to grow into usable, scalable technology. Ethereum founder Vitalik Buterin has already called ZK the most underhyped thing in cryptography, and privacy-focused technologists like Edward Snowden seem to agree. Projects like Succinct Labs, Rezero, and Espresso Systems are emerging, so use cases for ZK proofs already exist. Before we dive into decentralized applications in Web3, a quick word from our sponsor Algify, who made this video possible. Algify is the de facto DeFi hub on Algorand. It offers a fast, affordable, and transparent alternative to black box exchanges and lenders amid the CeFi wreckage. Algify's AMM, StableSwap, lending market, and community governance make it the one-stop shop for high-performance DeFi. Its move to launch fully programmatic on-chain DAO governance will make Algify the first protocol in Algorand to reach true decentralization. Trade and contribute to the future of open finance today at algify.org. Getting back to our outlook, many are calling Web3 the future of the internet and pointing to the decentralization, security features, instant payment options, and growth potential as key benefits. There are significant gaps in the Web 2.0 gaming sector. For instance, the market for gaming skins is worth $50 billion, but gamers don't actually own the skins they buy. Web3 promises a revolution in in-game customization by making the skins NFTs that the players actually truly own. So, from decentralized applications to Web3 marketplaces, we expect growing popularity of ecosystems which operate without a central authority and provide users with ownership rights over their purchases. TradFi will follow in DeFi's footsteps. We expect big money to make big moves in the digital economy, led by names like KKR, JP Morgan, and HSBC, all aiming to make tokenized asset trading more accessible with real-world assets in mind. This year, JP Morgan executed its first on-chain tokenized asset transfer involving tokenized Japanese yen and Singapore dollar deposits. However, the market for tokenizing low-liquidity real-world assets like real estate is relatively immature. So given this, and the declining DeFi TVL, traditional financial instruments are the most likely candidates for tokenization in 2023. All in all, with the more reasonable valuations in the blockchain ecosystem following a tumultuous year, we expect more large-cap TradFi players to step into the tokenization space. The total digital currency market cap sits at just under $1 trillion. Over $27 billion is traded daily. Understandably, lawmakers and regulators have been foaming at the mouth to put their names on bills and regulations. You'll recall Senator Elizabeth Warren's attempt at a crypto bill this month, which received criticism from crypto think tank Coin Center for being unconstitutional and an attempt to ban privacy in digital currencies altogether. There's a bit of a turf war between the regulators at the SEC and the CFTC, both of whom claim jurisdiction over the crypto industry. We'll have to wait for meaningful, well-crafted legislation from Congress to settle that dispute and give the industry firmer ground on which to stand and, we hope, innovate. Meanwhile, the European Union and the European Central Bank will continue their efforts with the MiCA bills, which regulators claim are critical to rein in the Wild West of the crypto world. The UK has also been active, and stablecoins could soon become a regulated payment tool there. Whatever the outcome of legislation in the US or Europe, the central bank digital currency arms race will likely continue, given that 80% of the world's central banks are considering launching a digital currency by partnering with commercial banks. China's digital yuan appears to be ahead of the competition, with countries like Japan and Turkey also following. We're curious to see if this leads to a power struggle between stablecoins, which have traded over $7 trillion this year, and CBDCs in the near future. We can put our 2023 outlook into three main categories. First, DeFi will grow while CeFi consolidates. Enterprises and institutions will be looking to invest in well-managed, robust projects with the best intentions for DeFi, meaning weaker projects will likely wither away. Second, new opportunities will emerge as enterprises adopt smart contracts and continue the DeFi engineer hiring spree, which has already seen a growth spurt despite the crypto winter. Third, core reforms will stabilize the industry and help build the foundations of a more sustainable growth cycle. We're talking about scaling and privacy improvements thanks to zero-knowledge rollups, the growth of Web3 thanks to decentralized applications, and bigger and more practical uses of tokenization in traditional finance. What major developments in DeFi will you be watching over the next year? Let us know below, and thank you for tuning into The Defiant. See you next year.